Expectations, they came back at 239,000. We had Philly Fed. We also have unemployment claims. Now, unemployment claims came back at 216,000. Excuse me, they were expected at 216,000. They came back at 208. This is the amount of individuals who filed for unemployment insurance. And so the perception is that the economy is getting stronger. Previously this week, we had our PPI prints come back in incredibly low from the perspective of history. And then we had our CPI as well come in lower than expected. And here's just the ironic part of all of this is that when you're looking at what created these low inflation prints, it's essentially crude oil, gasoline, falling from making a pullback here into support. And while everyone is celebrating these lower energy prices, and that's great, I can't argue with that. The reality is that right when we have these prints of CPI and PPI, where everyone's celebrating the lower inflation prints, we've also, ironically, confirmed the next liftoff point for energy, for crude oil, for gasoline, and that's a low tick as far as the energy prices go. We are confirming our trend change here in time and price in terms of the measured move. We also have my adaptation of Charles Gave's regime tracker. And this is tracking 3 different time frames. But essentially what it's taken us off of is this edge of a deflationary boom. And it's taken us into a deflationary bust. There was a tick towards the inflationary bust, but then we took a lateral move at yesterday's close. What does that mean? It means that there's energy inefficiency, that multiples compress, that companies will have a harder time converting energy to profits. And what goes up during that time? The VIX and the dollar. That is a deflationary bust. That's dollar strength. Its volatility increasing. What's safe historically? Government bonds. That's it. Everything else goes down. And there's also this concept here that we were exploring yesterday about the VIX and the VIX EQ. And I want to touch base on this a little bit. We at this point have the largest spread that we have ever had in between the volatility of the S&P 490 and the volatility of the S&P 500 or the S&P 10, which is essentially 10 stocks holding the market up. And the whole world is investing in the US markets now. When a dollar strength trade starts developing, and then you also have names inside of the markets that are rolling over, the 490 are not doing something completely different than the 10 that are leading the market. This is the widest. This 8 days up here is the widest it's ever been. So you get into a Thursday like we are in right now. Thursday, before going into a weekend, this is where market participants will usually put on their protection. It's not on a Friday afternoon. It's usually not even on a Friday morning. It's usually, kind of front running, wanting to participate inside of where there is volume and liquidity inside of our markets. Thursdays are when, the big bids happen if we're in rallies. Thursdays are when the big sell-offs happen when we're inside of a series of... This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.